This is the briefing for Friday, April 11th. The indices this week have been really in just a rotational pattern with a lot of volatility. Now that rotation, or the degree of the ups and down movements, has been pretty extreme, as I'm sure you have experienced. This is a 60-minute chart of the spiders, the Qs, and the IWM. Now you can see here, this is basically this week's trading, and you can see the pretty volatile nature of what we've been seeing on an hourly basis, especially this day when we had this huge move up based on the 90-day freeze for tariffs. Same thing occurred in the Qs and in the IWM. So it's very difficult when you see that kind of volatility, especially in a market that is not rational at this point in time. It's irrational based on news events, and those news events basically surround what's going on with tariffs. Now, if the tariffs are resolved and that news comes out, then this market will probably be screaming to the upside. On the other hand, even if they are resolved and there's some other issue, geopolitical issue or economic issue that we don't see right now that comes out, the market could turn and reverse very, very quickly. So caution is warranted in the coming week, especially. The market is a short week next week. Friday is Good Friday, so the market is closed on Friday. So we only got 4 days of trading, or 4 days of analysis in the coming week. Now, it's important to note that this is S&P 500 breadth. It strengthened nicely at 366 shares positive for the day, 1,483 in the NASDAQ, and 817 in the Russell. So you can see I've put some trend lines up here. So we've got a series of higher highs and higher lows, eliminating this day. So you can see the trend here. So if this is broken, that would give me potentially at least a degree of probability assessment that would suggest that we're potentially going to see another move to the downside. Now I'm going to get to the move to the downside in a minute. But you can see volume fell off pretty dramatically in today's trading. Volume has been pretty much at an extreme for the last several days. This is a daily chart of the spiders, and you can see volume was just really, really extreme over the past several days this week as we got that volatility. We had basically 52-week highs minus 52-week lows that was at an extreme I had not seen in the recent past. And it has recovered fairly nicely. 388 shares negative on 52-week highs minus 52-week lows. But what's going on here is you can see this potentially is a three-step counter trend rotation to the rally here. Now I want to switch to a weekly chart, and the weekly chart shows it a little bit better. So you can see this is the rally that started going all the way back to April of last year. I'm sorry, April of 23. So you can see that we've had a series of higher highs and higher lows, and then we broke the previous higher low, this low, and then this low, and now this low, which suggests that we're in a greater degree time and price counter trend rotation. So you can see this is a leg 1, leg 2, and leg 3. There's not equality between 3 and 1. As I've discussed in previous briefings, 3 is much longer than 1, which gives me somewhat of an indication that potentially we have not seen the low yet. Now, this low and the spiders came in at 480 on a daily basis. I've got the next level of support right at 480. And let's see, the low for that day was at 481.80. So you can see that it basically approached that support level and bounced off of it. Now, except for this day kind of really messes up my my analysis or the probability assessments for my own trading in developing a strategy for the coming week. But you can see we went up and we tested the next level of resistance at 550. But if you eliminate that day, this to me looks like there's going to be another low taken out. That this low potentially has the possibility of being taken out. So based on the chart patterns, the longer term chart on the weekly basis tells me that potentially we're at a low and we're potentially going to see another move back to the upside. But the daily chart kind of tells me that that may not be the case, that we might see another move back to the downside. The important level of resistance that would eliminate going or trading back down to test this low would be trading above this 550 and closing above this 550 level. So that's going to be an important level to watch for in the spiders and in the other indices as well. Looking at the Qs, you can see basically it's the same situation. We got this 466 level that was tested. That was the next level of resistance. I had this was a support area going all the way back to this time, and I'm going to eliminate that that trend line because that's so old. It's not really not relevant anymore at this point in time. So you can see that we're basically lingering just below this 466 level, right at close at 454. Support comes in. Once again, this is a longer term support level. It comes in right around 420. And then, of course, we've got the low of this move to the downside that comes in at 400. So volume falling off pretty dramatically. That's another kind of probability assessment that this is a counter trend move to this move here, because certainly this was an impulsive move. But once again, this day just kind of messes up my whole analysis here. I'm not sure where to put it or what to do with it. Red increasing nicely, but it's going to be important to see if the Qs can trade and close above 466. That would eliminate a higher probability of another move to the downside that would test this low and or take it out. In the Russell, the IWM, you can see we tested this 170 area. That's the next level of support in the Russell, and that was back from a couple days ago. And then resistance comes in at the 197 area. It's going to be important to see the Russell, see if it can test and break through the 197 area also. In terms of overbought and oversold, we are basically neutral, and you can see this is NYSE. We're neutral in the NASDAQ. So that doesn't help us out in the analysis, but it does give the opportunity for the market to go in either direction. And I should point out that when we do an analysis on a market, what we try and do, it's a probability assessment analysis. We try and come up with the probabilities of one event occurring over another. And the market gives us information all the time. In fact, if you're a short-term trader, the market gives you information with every tick. If you're a swing trader, you look at maybe hourly and daily charts, and a longer-term trader might look at daily and weekly charts. But it gives us information, and we use the tools that we've gained, that we've learned in how to analyze the market from a technical perspective to come up with a probability assessment of one event occurring over another. And basically, and I'm just going to be honest about this, this week has just been a very, very difficult week in developing a probability assessment of one event occurring over another. I have a small long position on, and I'm going to hold that position into Monday. I've held it into Monday, but if I don't see a move in the indices that is going to be moving above the close from today, I'm going to exit that trade. If I see that it breaks this trend line here, that would suggest to me that I need to exit that trade also. But it is a very, very small long position, and I'm going to just see what happens on Monday to see if we don't get any more of a movement higher. And that would give me more information to determine what potentially was going to happen in the balance of the week. Now, looking at the other internals, this is the percentage of stocks above the 50-day and 200-day moving averages. You can see this was pretty sad. I mean, on the 4th of April, we were down to 10% of stocks above their 50-day moving average in the S&P 500, and about 20% above the 200-day moving average. That is just really a very, very weak market. In the NASDAQ, we were at really about 13% above the 50-day moving average, only 19 to 20% above the 200-day moving average, and in the Russell we were down to 10% above the 50-day moving average, and looks like about 13% above the 200-day moving average. I have not seen these indicators, these internal indicators that I use, at that low of an extreme at any time, potentially since many years ago. So this tells me that the market has weakness, but it also suggests to me the potential that we could be seeing a market that is way, way overdone to the downside. And as I have told clients when I speak to them, is that if a bottom is in, this is a tremendous buying opportunity. It is a tremendous buying opportunity if a bottom is not in, but certainly you have to be able to sit through taking out the lows that occurred on let's see, that was the 7th of April. So that's kind of the flagship right now, and I'm going to be holding through to this to see what happens with this trend line, and hopefully that small long position I have, that I'll be able to add to it, especially if we begin to test the upside resistance levels I covered just a few minutes ago. Have a great weekend, and I will pick this back up on Monday for subscribers.